Hey everyone, Eddie Wilson here with the Think Realty video podcast. Excited to come to you today. As the owner and founder of Think Realty, I get excited when I get to do the podcast. Typically our host is Abhi Golhar. I know I'm a little bit less tan than Abhi is. I look a lot different, but I guarantee you I'm going to bring some great content to you today with the guests that we have lined up for you. So we're excited to continue to bring this to you each and every week. Thank you so much for all of you that join us and connect with us on social and reach out and have conversations with us. Let me say a quick thank you to our podcast sponsor. Our podcast is brought to you by Norada Real Estate Investments. That's your premier source for cash flow investment properties, single family real estate, brought to you by Norada Real Estate. You can see them at Turnkey Real Estate Investments, plural, turnkeyrealestateinvestments.com. Go see our good friend Marco Santarelli over there. Today, our guest is a multifamily real estate investor that I've known of for quite a while. He's out of the Houston, Texas market, and our guest today is Robert Martinez. Robert, are you with us?
Hey, I'm here, man. It's great to be here.
Yeah, good to have you on the show. Always good to see you, and I'm excited to have you on the guest, or as a guest on the show. So you are a multifamily real estate investor. Tell us just a little bit high level about your business, how long you've been in business, things like that.
Yeah, so I'm sorry. I own a company called Rockstar Capital Management. We currently have 21 properties across Texas, mostly in Houston, and then we've expanded in the last 18 months to South Texas. We've got just under 3,800 units that we manage. More importantly, we've done 12 cash out refinance events since 2011, and I'm the country's only two-time national independent owner of the year.
Very good. Is that through the National Apartment Association?
The National Apartment Association.
That's awesome. That's a great organization. So how did you get started in multifamily real estate investment, and why choose multifamily over single family or commercial, or what was that path like for you?
It was really interesting because it's just like dumb luck, right? Because I didn't grow up in a family that had any real estate other than our single family house. My dad worked at Whataburger. My mom worked at Levi's. The Levi's plant shut down, moved to Mexico. She went back and got re-educated and later worked for the school district, right? But none of that prepared me for what I'm doing today, other than my dad was an excellent manager of people. But education is really important to my father. So he instilled with us that we need to go to school and get good grades, the American dream. Go to a good school. I went to Texas A&M University. I graduated with an engineering degree. And when I went into the workforce, and I pursued a sales side versus the hardcore engineering side. And I got involved in oil and gas. I sold technical equipment, and I did that for the better part of 10 years. But as anybody who's ever worked in corporate America understands, is that sometimes they like to monkey with the commission plans. And when you get really good, you get monkey with it a bit more. And I understand the game. When that happens 2 or 3 times, you get an epiphany. And the epiphany is your employer wants you to make here, but you want to make here. And so what they do is they go and they switch accounts, or they play games with the commission numbers, and they keep you from making here. And after that happened a few times, I got an epiphany. And the epiphany was that I don't control my financial future. My employer does, which means that they control the kind of lifestyle I was going to lead. They control the kind of schools my kids are going to go to. They control what kind of vacations I was going to have, the kind of house, or again, the lifestyle that I was going to lead. And I didn't like that. I wanted that back. So I went on a search to try and find ways to offset my income that I was being taken from my employer. And, and I stumbled into real estate. I had never thought that I would be an apartment owner, and much less a 2-time national owner of the year. That's not what I was trained to do. It's not what I was educated to do. It's not how I was wired. I wasn't conditioned to do that. I stumbled onto a real estate club here in Houston, Texas, and I was blown away by what I learned. And I walked in there thinking, I'm going to own 3 or 4 rent houses. I'm going to make $400 to $500 in cash flow. I'm going to supplement the income. By the end of the year, I'll make $15,000 to $20,000, and everything will be happy. Then I stumbled on into the next day of the training, which was apartments, and I understood the what I call now the magic formula: how a cap rate works, how the NOI works, and how, more importantly, how apartment valuation works. And I realized that was my key to success. So in 2007, I joined the club. By 2008, I had purchased our first multifamily investment with a business partner, and I walked away from my six-figure income to pursue a career in multifamily, going all the way down to like $36,000 a year until I started to grow that up as we grew the business. And as I did that, I started to realize, wow, that my sales background was very helpful in coming into the apartment world. I realized that it was very sales heavy, that if you can train your staff and invest in them, that you can get a lot out of them and you can move the needle on that NOI needle. And rest is history, 21 apartments later on, almost 4,000 units.
That's awesome. So now you have 4,000 units under management, or have you disposed of some? And, do you keep growing? What's your current portfolio look like?
Yeah. So again, I had a business partner from 2008 to 2011. I had 2,000 units that I was the operating arm. I was 50% owner of the management company. He and I split ways. And in 2011, I started Rockstar Capital, and we grew. And so over that time, we've had 22 investments that we purchased. We sold one. We're on path to sell 2 this year to liquidate a lot of cash and take advantage of what was going on in the market, and refinance 3 more. But Corona came in and really shot that to hell. And so it's been now about just managing our current portfolio.
Sure, that's awesome. So, as an apartment investor, a lot of people, and I'm a passive investor myself. I've invested a lot I own a bunch of single family. I've been in a bunch of syndications when it comes to, multifamily, even hospitality. The hospitality is not doing so well right now at 10% occupancy. But you look at these opportunities, and I think that most people, as they view it, they think it's too high of a barrier to entry. I think they don't realize that there's groups like you that actually will aggregate investors so that they can own a piece of an apartment complex. So talk to the Think Realty listener and viewer a little bit about, syndication, the model of syndication and how you do that.
I was very fortunate because in the real estate club, there was a lot of eager beavers. A lot of people wanted to get their money together. So syndication was actually pretty easy in the real estate club that I was in. Because everybody wanted to keep working. They weren't willing to quit their day job like I did and become the lead syndicator or the lead partner. So syndication wasn't too difficult, but what we do is we pour money together. We pour money together and we purchase an apartment complex, which is actually really, it's pretty sexy to think about it, right? Because you've never been exposed to real estate probably other than the single family house you grew up in or the single family house that you bought now as an adult. And all of a sudden now you're about to buy 128 units or 228 units, and you're going to own a multifamily investment. There's tremendous benefits with owning an apartment complex. I just got an investor text right before I got in here, and he's a first-time Rockstar investor with us. He's invested in 3 deals that we purchased in 2019, and he sent me a text back and said, man, I have never gotten a tax refund back. But because of the K-1 losses that I got this year, which he never had a K-1 before, he's going to get $12,000. And I was like, there you go. Right. You don't need the government for a stimulus check. You need to invest in yourself and put your money to work, because he just got his own stimulus check that was 10 times what the government just handed out. And I was like, wow, this is, first of all, it's an incredible marketing opportunity, right? But second of all, it made him a believer because he's making money. We cash flowed on one of the 3 deals. The other deals are still in stabilization mode, but one of them took off like that. And he's making his money back really well. And now we got this big $12,000 check that he didn't expect. I told him about it, but until you live it, until you believe it, you don't know that you're going to get this $12,000 check. And wow, what a time for it to come right now, right? Right.
Yeah, that's awesome. Very good. So, over the last couple of years, the deals have gotten thinner and thinner, right? Like the syndications. I got in an Austin, Texas syndication on 6th Street in Austin about 9 years ago. And so, one of the most amazing investments I've ever had in my life, right? I'm in a couple in San Diego and various other markets, but those deals started to, those were tougher and tougher to find, those value add deals where there's tons of money and tons of meat on the bone. Do you believe that it is going to be, with the market taking the turn, the really interesting, weird turn it's taken over the past 30 days, do you believe that there are going to be some multifamily opportunities coming on board because the margins were so thin at what people were buying over the past year to 3? Do you believe that some of those deals are going to go belly up and come back into the marketplace?
I think there's a couple of answers to that. Number one, I think for sure the best time to get into real estate was yesterday. Yeah. I'm going to do a webinar on Thursday with a gentleman that I met in 2010 that did my very first deal as the loan syndicator, and he took a $125,000 IRA and now owns 9 apartment deals with me off that original 125.
Wow.
Because of the deep value adds that we did in the recession, what have you. So I preface that to answer your question. Yeah, there's been a lot of people that are buying deals, a lot of high profile names out there on the internet, that are fundraising and doing a syndication and doing accredited and unaccredited investors. I went through the recession, and I remember that's when I got involved in 2007, 2008, right before the crash. And I got to be really good because that's when I was born. My real estate career was born. And I learned a lot there. And I was able to put people out of business, and I saw them come back to life later on with a lower cost basis. But this is a unique situation because the government is now involved, and the government's helping to bail out people right now. And so what I've been telling everybody that this virus has tested everybody's liquidity and their solvency, but more important, what you did when times were good, what you did when all boats were floating in the harbor. And right now, people are going to get exposed. But the government's involved. And whenever the government's involved, it changes the rules of the game. As you know, everybody's applying for the employment payroll reimbursement or loans that we're going to get. Well, that's a way that some people can stay afloat. However, the forbearance is a poison pill right now. And if you take forbearance, it's because you need forbearance. It's because you have not done what you needed to do when the times were good. Your financial situation today is dictated by what you've been doing in the past and what you've been doing right now. And your financial situation in the future will dictate on what's going on right now. If people take that forbearance bill, they're going to have 6 months of no evictions. They're then going to finally get a chance to evict. They're going to be last in line at the courthouse, which is probably going to be 2 more months to get evictions out. And then at the end of that 12 months, they're still going to owe that money. That's when the opportunity is going to strike. Because I think what the forbearance did was just like a monopoly, right? When you play Monopoly, you have to, when you get to the point that you have to mortgage your properties, the game's over. And I think that's what that forbearance is. If it's an opportunity where you have to mortgage your Monopoly pieces, the game's over. Yeah. It's just a poison, but you're kicking the can down the road. And I think in 12 to 15 months, you're going to see some deals come around. I don't think it's going to be a huge number. But I will say this virus, this situation is exposing the weak operators from the good operators. The guys that were living basically paycheck to paycheck, month to month, 2 months reserves. We're very fortunate. The tax man came to Houston 24 months ago and has been relentless. So we've had to stock away more and more money. Our properties average around 6 months reserves. I can not take a rent check right now. And for 6 months, we would survive. Sure. If we take 60% occupancy, 60% of the money comes in, we can go out in excess of a year. If they're not in that situation, they're going to be probably taking forbearance sooner than later. And those are the deals that you might see and so there might be a little bit of blood. I just don't think it's going to be as much as everybody thinks. Yeah.
We were talking to one of the chief economists for Freddie Mac the other day. And it was interesting because he made the statement and he said that that to take the forbearance is to prove that you need more leverage than what the property can handle. I thought that was a great statement because you've already leveraged that property through financing, and to actually take forbearance is like saying, I'm going to leverage this property more than what it can actually yield. And you need that leverage in order to stay solvent and alive, and it will come back to bite you. That's a great point. So you made a point to say that, that there are weak operators and there are strong operators. What makes Rockstar different? Is it that you're vertically integrated? Do you have, are you managing your own properties? What really sets you apart from maybe some of these ones that are struggling right now?
I think the success and the key to life is people. And it's a concept I learned from my father. He worked at Whataburger for 40 plus years, and he was always investing in his people. And it's just something that came into me. I think people are going to dictate whether you survive. People dictate how consistent your business goes. I've done a really good job at Rockstar Capital, I believe, of investing in my people, finding out what goes on in their lives, helping to see if I can help them get further in life with the understanding that maybe they'll be able to help me get what I want. I know we're going to be successful, but I don't want to get at the top of the mountain and not have anybody to share stories with, not have anybody to talk about what happened in March of 2020, April 2020, when we had to go through the coronavirus. I want us all to succeed. So first of all, when everybody joins my company, I have 110 staff, and they all interview with me. And I ask questions and I sit there and listen to the interview and I try to find out from them what's important to them. And if I can help them get what's important to them, I think they'll help me get what's important to me. We've also been able to help our staff invest in apartment deals the way I was given an opportunity. Apartment investing changed my family tree. It changed my life dramatically. My net worth has grown exponentially because of apartment deals. And I want to help people that are in my business benefit from our company just like this. So recently I made an offer to our staff and I said, if you can come up with $5,000, I will match you $5,000. And you can put that into our next apartment deal. And we just sold our first deal. You asked me earlier, how many deals you have, how many have you sold? And we sold one deal. That deal made a return of 673% in 7 years. I bought it in 2012. So if you were investing in that deal, you put 5,000 down, and I give you another 5, like a 401k match. Now you have 10,000. That 10,000 would have turned into $67,300. Plus, you still would have had the original equity back. That's a game changer for people, for anybody, and for my staff. So I think investing in them and keeping the consistency of the staff is a big game changer. It's a big differentiator for us in our business. Number 2, I think we brand really well. I think we've learned a lot about how to survive and how to brand. And I think brand is what's going to carry us through this crisis. 24 months ago, I realized we had some holes in our business. And I sat down with a business coach and we came up with the idea, figure out a way to put yourself out of business and now come up with a defense against it. And those ideas that we came up with is that I hired somebody who was better at financials than I was. I hired a marketing champ that I didn't have before. And I hired operators that I thought were actually better than I am. I mean, people with 27, 29 years of experience at Camden, at Greystar, the big head honchos. I mean, I'm an independent owner guy. That's how I got started. And I've grown and I've been successful, but I know there's more people out there that know more than I do and they can help us get through this. I'm really excited that I added those people when I did, because it's now prepared us for this crisis today. So I think the situation that we were innovative and we recognized that we had a weakness, and now we plugged that hole, has prepared us for what's going on today.
Robert, I appreciate it and appreciate the candidness. One last question, I like to ask everybody that's on the show is, where do you see yourself in the next few years? I mean, what's ultimate success for Robert Martinez and Rockstar Capital? What do you want to achieve in your lifetime or in the next few years? I mean, what's the big next goal you're going after?
So we document on YouTube our journey to 10,000 units. And what that means is it's not the race to 10,000 units. It's the journey to 10,000 units, the buying, the acquisition, the selling, and the issues like we're going through right now and how we manage through those. And because I want to be able to live back and look back at those ideas and share those stories with my kids, with my team. But more importantly, I want to make sure I made a difference in people's lives. That's why I've given everybody the $5,000 matching opportunity, because I want them to benefit in real estate the way I benefited. And enough of them do that, I think they'll help the people underneath them benefit as well. And this company will have massive success. I think in the next 5 years, we will have a massive brand. I think that our visibility will grow exponentially. And that right now is a great opportunity to start to fine tune that future life, because where you are today is based on the actions you took in your past. Where you will be tomorrow will be based on the actions you do today. And I think we're taking the right actions to hit those goals. That's awesome. How can people follow along? I mean, I know that you're active on social media and other platforms. How can they connect with you and follow the journey with you? Absolutely. Well, if you like anything that I said and you'd like to invest with us, please find me at rockstarcapital.com and sign up on our investor league. If you want to get some free education, free articles, I'm all over LinkedIn. We produce 2 articles a week. Or you can find me on Instagram if you just want to have fun with me and just watch some more funny videos in our micros at apartmentrockstar.com, or on Robert Martinez at Facebook if you just want to be my friend. Awesome. Thank you so much today for your time, Robert. I really appreciate the time and the tips. And I hope that a lot of our real estate investors will come and participate with you. Hey, thanks for having me. It's a fun time. Absolutely. Thank you so much. Thank you so much to the Think Realty podcast viewers. I appreciate your time and effort today for giving us your time
and listening to the guests that we have today. As always, we hope that we brought some value to you. And thank you for connecting with us and constantly asking us questions so that we can bring guests to you that answer the questions that you desire. If you haven't already connected with us on social media, we are where you are. You can find us on LinkedIn, Instagram, Twitter, Facebook, all the above. And then also, we would love for you to go to thinkrealty.com and download our latest version of the digital magazine. You can get it there at thinkrealty.com. You can also subscribe and get the physical magazine to your doorstep. Or when everything changes and everything gets back to normal, you can get to Barnes & Noble and pick one of our magazines up on the Barnes & Noble shelves across America. Thank you so much for watching today. I appreciate it. I want to give one more thank you to our sponsors. This segment's been brought to you by Residential Capital Partners, a leading hard money lender with a local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves. They know your business. You can visit them today at residentialcapitalpartners.com. That's residentialcapitalpartners.com. If you don't mind, go visit them as a thank you for them supporting us. Thank you so much for watching today. We will be back again soon. I'm sure Abhi will be hosting again in the very near future. In the near future, though, stay safe, stay healthy, and happy investing.